Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through the overall market. I'll let you know what's going on with the overall markets. I'm going to touch on the 10-year yield. I'm going to touch on some of the precious metals, just kind of go over it real high level, a big picture view. And we'll hit the dollar up too, and then we'll go over the overall market. That's like the S&P 500, NASDAQ, stuff like that. It's always good to see what's going on over there and to see where that is positioned, because if that's fallen off a cliff, it may have an impact on the stuff that we're invested. Now, even though it could be falling off a cliff, I'm going to remain the course. That's me. Why? Because this is a gigantic opportunity. This is not going to come again in anyone's lifetime. Not this size of an opportunity, I don't think. I mean, maybe you get one more, maybe, but the way that this is set up, the way that we've got the commodity bull market positioned, I just don't think it's going to come around again in the same type of crisis. Energy crisis at the beginning of it, just like the 1970s, except this time it's worldwide. We've got liquidity flowing into the markets from demographics in the United States. The reason I focus on the United States so much is because these commodities are priced in dollars. So the liquidity and the weakness in the dollar, the absolute weakness, not the relative strength or relative weakness, the absolute weakness contributes to tailwinds in commodities. I think it's demographic driven. Others think that other financial measures or monetary measures have a larger impact than what I think it does. I think those measures are driven by the demographics, and that and that the world or the United States especially is positioned in a way that they can't really make meaningful change to the inflation. But we'll see. We'll see. And we'll monitor that. There's things that I monitor in the real estate market. There's things that I monitor for liquidity stuff, and which is basically interest rates. But we'll monitor that as the commodity bull market progresses. So let's dive in here. I'll give you my financial opinion. This is the 10-year yield I have pulled up. We've broken this long-term downtrend line. Could you draw this in a different way? You could draw it more like this, but either way, it's broken to the upside. So here or here, it's broken. Now we've got this other resistance line going across that we're trying to break out. Now, this thing doesn't have to go straight higher. You can have pauses, and we could pull back. We could pull back with the market coming under pressure. And it's not the end of the world. We just have a regular pullback. And if you notice, I've talked about this a lot. There's your pattern. Remember that pattern? Remember that pattern. We've got another pattern that's developed, and we could be doing something like this. And remember, I don't necessarily know where this thing ends up. This one is obviously in a downtrend. This one's going to be coming in an uptrend. So I think the ending price will be higher. This is usually a lead-in to a much larger move. And it depends. We'll see what happens. And again, that's just kind of my guess and what that is. That's a inverted kind of head and shoulder type pattern, which is a bottoming pattern. So again, that's me guessing what's happening. That's not the true outcome. And I'm not projecting that, but I'm saying it's possible they could do something on the lines of that. So I do think that the 10-year yield will go up. The 10-year yield follows inflation. Bondholders follow inflation. The interest rate isn't a leading indicator, and I don't think interest rates necessarily change the market conditions. They do somewhat impact it, but I think it's heavily influenced by the demographics. And you could have an entire debate around what drives interest rates higher. I don't think that the Federal Reserve could hold interest rates down at this level, because everyone would be selling. The pressure would overcome them, I think. And that's why we had such a large increase. They were in there meddling around with things, and then they eased up, and then the market just shot higher. The reason it shot higher, the reason it was so dramatic, is because people are in there jacking around with buying bonds. Looking at the Dollar, the DXY, someone had said, why do I project this going lower? I'm not projecting it going lower. What I'm saying is that it's probably going to go higher first and then eventually head lower, like history. This went higher, consolidated, and then broke lower. That is the cycle. Now, when looking at this dollar and noticing these movements, this movement is this movement, the circle is the circle movement, and then we came on up and we haven't come on up yet. What I'm basically saying is that this cycle is going to repeat very similarly to the last cycle, the progression that it went through. So I think that the dollar, the relative strength indicator, will come up and then it'll head lower, something on the lines of that. Again, I don't know the path necessarily, and this is just the cycle going through. This also tells us a little bit where we are in the cycle. If we're just coming up in here, that means that we're in the 2000, 2001 era. And that's where we're at. I mean, that based off of this. So I'm not just using this data and saying, oh, I'm going to guess. Well, I think we're going to come up to this triangle area, probably head lower, and that's part of where we are in this cycle. Everyone thinks that we're later stage than what we really are. We haven't built the homes. The demographic is there. We are short, period. It's not even a debate at this point. And I know a lot of people are going to debate, oh, we got shadow inventory. Yeah, okay, whatever. I don't agree with that. The CRB index, this thing's been rocketing higher. This has been on fire still. So the CRB still wants to go higher, and we'll see what happens with it. But that still looks good. Gold is coming and doing a full retest. You know what I like to do on retest moves? Everyone knows on the channel what I like to do on retest moves. I don't even question it. It's an automatic. I just go in there and buy some. That's what I do. Silver came a little bit exaggerated on this move in terms of the pullback. Maybe it pulls back a hair more. Again, I'm a bull on it. Why? Because the market conditions, the demographics, the inflation, all of those things. This silver is a late stage performer. If we're early, this shouldn't be performing yet. This is another indication of where we are in the stage of the commodity bull market. If we're so late in this commodity bull market, silver and gold would be taking off, and platinum. We're not even there yet. And here's platinum. It's broken out, but we've been moving sideways after the breakout. Could this fall a little bit lower? There's nothing preventing this from doing a full retest move even. If things get bad, if the dollar strengthens, and I'm not saying that, I'm talking about the DXY, not absolute terms, relative terms, guys. Relative. DXY is relative. Some people say, oh, he thinks the dollar is going to strengthen. That's not what I'm saying. I'm saying relative to other currencies. In the short term, if there's fear in the market, the DXY will strengthen relative to other currencies, even though it may still have massive inflation. That's exactly what I'm telling you. It's exactly what my viewpoint is, at least. And we could just rocket higher. Again, I don't know the path necessarily. Now, looking at the overall markets, like the S&P 500, and so the S&P 500 was up last trading session. We saw our commodities go berserk. We are still in a scenario here where we have lower highs coming into play, or lower lows and lower highs. Here's a high, here's a lower high. Now this is probably going to stair step lower. Remember about the stair step pattern. Stair steps up, stair steps down. This can drag us down lower. We could pop higher, hit our head on this resistance line, and roll back over. I mean, that's basically what we've got is there. So we could just be stair-stepping lower for a short period of time. That is the cycle. That's telling us where we are in this cycle. Things usually tighten up a little bit. This pulls back, the S&P 500, the NASDAQ. And then we hopefully will get a decoupling between commodities and the overall stock market. Here's the NASDAQ doing something very similar. The NASDAQ here There's your high here, a lower high. Here's your low, a lower low, a lower low. So we are moving lower, and we're getting a bounce off. The Nasdaq's getting a bounce here in the short term. Will this continue lower? Sure looks like it. Looks like we've got a good momentum rolling to the downside. Lots of leverage in this market, and that leverage needs to deleverage and sell out of the market if they get margin calls. You know, we've got Chipotle. I'm just starting to look at other things. You can see that we've broken out of that. We are still below it. We're bouncing up to the top, and we may roll back over. We may come back up within this pattern even. And maybe it's not. Maybe this pullback is all we're going to get. But I can tell you this, the ratios tell me to go buy commodities. The ratios of commodity to S&P 500 are outperforming. Commodities are outperforming stocks. That's where we want to be. I wouldn't want to be in this. There's no reason to. Apple bouncing, but again, it's the momentum is definitely slowing. We've got a high here, a lower high. We've broken out below that. This may come up, do a retest move, and roll back over. That's my cool, simple chart. Amazon bouncing higher. Last trading session. The charts, I mean, obviously doesn't look that great. And we've got a support area basically close to where it's at. So it's bouncing off this support area. We'll see how high it goes. We'll see if this heads higher, and it very well could. Very well could. We could go into another blow off top with all the inflation out there. With the interest rates going up, I don't think so, but we'll have to wait and see. Facebook, we got that rounding top, and it blew out to the downside. It's had a pretty big smoke show here on the downside. It really got smoked. But we're coming back a little bit in the short term. Google, another one that's got that rounding top. This does look like it wants to go lower. Does not look like something I would want to enter in the long side. Baidu, another one that's within its long-term channel. We're at the bottom of the channel. And remember, a lot of these are dependent on the DXY, relative strength of currencies, because this makes its money in a different currency. If the DXY is relatively stronger, you'll see this pull back. And when that dollar starts to weaken against other currencies, this will probably pull up. Potentially. It's still a tech company too. Visa's got that kind of roundish top. And we've got support basically right where it's at. So the support is about where it's at. We break through that support to the downside, we could see a big move to the downside. MasterCard, same thing. We've got some support basically in this general vicinity, and we'll see if that holds. But the momentum is going sideways. Now, some of these other ones that are a little more crazy, the Trade Desk, it's broken out of its long-term uptrend line on the top side here. I put it on the top side here. It's broken out of that. Good sell-off, cutting right through it. Now we're coming back and doing a retest. We'll see if this comes back above that resistance line. And then we have Roku. Roku is bouncing off this support region. This thing's gotten smoked, but it's got a megaphone pattern. There's your double top, and then your sell-off. And we are way down here, and we're going to try to bounce back above it. We can put a simple trend line in here, and it's actually broken through the trend line. Now, this might be a good entry point if, big if, guys, if technology is going to have a run. This would actually be a really good entry point. I'm not saying anybody to go out there and buy it, but I'm sticking with my commodities. And then EEM, this guy's been falling back. We've got a strengthening dollar in relationship to the emerging markets currencies. So the denominator here is getting hit with the currency exchange rates. So that's EEM, and that's why this hasn't gone up yet. The overall pattern here looks fantastic. We've got a tightening up. We kind of broke to the outside. We're rolling back over, waiting for that dollar to weaken. And this should be probably more like this. That's what I see. And we're not there yet. We're not there yet. So we could come all the way back here. That's probably a good spot to be looking for emerging markets. But that's what I've got here, guys, for the overall markets. That's what I have. And the NASDAQ and S&P 500 do not look strong. They look pretty weak. We've got interest rates getting stronger. They could weaken in the short term. That could lift markets up in the short term. And then eventually I think the demographic and the inflation will remain. That's my opinion. I think it will remain. And then you're going to see the interest rates go up again at some point. I think we're just having a breather. So that's what I've got for now. I'll end it there. If you guys are interested in how I'm playing this, you can subscribe to my website, the Platinum membership. That membership will get you exactly how I'm playing the commodity bull market. I think this will be the largest commodity bull market that we've ever seen based off of the market conditions, the liquidity into the system by the demographic, and then the market balances of all of these different commodities. They're all screwed up. And they're going to hit within the next year or two, a lot of them. So when you think of companies that use commodities as their inputs, which is almost all of them that make a product, they're going to struggle. They're going to struggle, and all that money is going to have to get pushed towards the front of the supply chains in the commodities themselves to produce more. If we want this world to continually grow like it has been, we're going to have to grow our materials that go into these products. We have larger populations with greater demands, and that just means more materials. It's that simple. But we've underinvested in these materials because the prices have been too low for too long in this large demographic tightening almost. A smaller demographic came. That's Gen X. That's what the 40 years of declining interest rates are. I think it's demographic driven. I don't think it's driven by monetary measures. Some people will disagree with that comment there. And that's fine, because when I look at history, I look at the demographic pushing this around, nothing else. That's the way that I view it. So that's what I've got for today, guys. We'll catch you next time. This is Finding Value.